Let's do one more problem, that is problem number 22. Mohan owned the patent of locks on April 1st, 2010. He granted Nagesh a license for 5 years to manufacture and sell the lock on the following term. Here the Mohan is the lessor and the Nagesh is the lessee. These are all the terms of the agreement. The first term says that the royalty of rupees 10 per book sold. So here the royalty has to be paid rupees 10 per lock sold. Then the next point says about minimum rent. So minimum rent of rupees 15,000 per annum. It means the minimum rent has to be paid by the Nagesh to Mr. Mohan, that is 15,000 rupees. Then the third point says that the short working could be recouped only within 2 years following the year in which the short working occurred, subject to maximum of 3,500 per annum. Here we have to understand 2 points. The first one, this is flexible recoupment period, and the second one, we can adjust the short working up to 3,500. Okay, then the fourth point says that if any year normally sales were not attained due to strike, the minimum rent was to be reduced proportionately to the length of stoppage. If due to strike, if there is any stoppage in sale, then the rent 15,000 has to be reduced proportionately to the length of stoppage. Okay, so they have given the sales detail, the number of locks sold during this period. So in 10-11 they have sold 900 locks, 11-12 1300, 12-13 it's 2000, and 13-14 1100, and 14-15 there is 1400 sales made by the company. During the year 13-14 there was a stoppage due to strike that lasted 4 months. So here they are saying that in 13-14 there was a stoppage in the sales due to strike, that is for 4 months. So let's start doing problem. The first thing here, 10, 11, 11, 12, 12, 13, 13, 14 and 14, 15. Okay, then the next point column is for actual royalty. It is 10 rupees per lock sold. So in the first year we have 9,000 total amount of royalty. 900 into 10 is equivalent to 9,000. In the second year we have 1,300 locks sold, so 1,300 into 10 is 13,000, and the next year it's 20,000. In 13-14 it's 11,000, and 14-15 it's 14,000. So minimum rent as per the agreement is 15,000 per annum. 15,000, 15,000, 15,000. But there was a condition regarding 15,000. And one more thing I wanted to add it here, that while reading you need to be very careful, because here they have mentioned that the rent has to be paid proportionately when there is a strike in that particular year, so that we are going to reduce it proportionately, this 15,000. So let's say 15,000 is paid, minimum rent has been paid for 12 months. Okay, so what is the rent for 8 months? So 15,000 divided by 12 into 8, you will get 10,000. So here the 15,000 has been reduced proportionately to the length of stoppage. So for 8 months we have reduced it for 8 months, so that comes to 10,000. Okay, then royalty payable. Royalty payable. Higher of these two, 15,000, 15,000, here it is 20,000, here it is 11,000, here it is again 15,000, higher of these two. So short working in the first year we have 6,000, and here we have 2,000 short working, and no short working, no, again here in the last year there is an short working of amount 1,000. Then surplus, here in the third year we have 5,000 rupees of surplus and 1,000 in the 13-14. Okay, recoupment of short working. So here they are saying that only within 2 years following the year in which the short working occurred. So this 6,000 has to be adjusted in this year and in this year, the following next 2 years, that too up to 3,500. So here we can adjust this 6,000 in this year or in this year, but here we don't have any surplus, so we are going to adjust in 12-13 up to 3,500. Still 2,500 is irrecoverable, so that we need to transfer it to P&L account. Okay, and for this 2,000 we need to recoup in the next 2 years, so this year as well as in this year. After adjusting this 3,500, we still have 1,500 as a surplus. So that first thing we'll adjust here, that 1,500. Okay, so out of 2,000 we adjusted 1,500. The remaining 500 has to be adjusted in the next year. So it's clear. The next, irrecoverable short working. Okay, so out of 6,000 we were able to adjust only 3,500. So the 2,000 was the irrecoverable amount, and here 2,000 we adjusted in the first year up to 1,500, and here we adjusted 500. So total 2,000 got adjusted, so we don't have any irrecoverable amount here. Then the last column is for royalty paid. Okay, in the first year the lessee is going to pay 15,000 to the lessor. In the second year again 15,000. In the third year it was 20,000, but the adjusted amount was 5,000, 3,500 plus 1,500, so that comes to 15,000. And in the fourth year the royalty payable was 11,000. Out of 11,500, out of 11,000 the 500 was adjusted, the short working 500 was adjusted, so it comes to 10,500. 11,000 minus adjusted short working, that is 500, you will get 10,500. Here we don't have any adjustment regarding the short working, so we are going to pay 15,000 directly. So this is all about the problem number 22, and here they asked us to prepare the ledger account in the books of lessor, so that we are going to cover in the upcoming videos.